everybody. We had some off recorded banter. It was lit. It was lit. It was lit. Yeah. Be thorough. Okay, I'm gonna start off with this. Be thorough in your work and don't be lazy. Because being lazy in your work can also translate to reason why you ain't successful in the market because you cut corners and you act like nobody gonna know you cutting these corners. All right. You cut corners everywhere. It shows up. You don't chart. You don't take your technical analysis serious. You don't take your trading serious. You don't take your risk management serious. You don't take your education serious in learning this craft and studying the material. Yeah, you're going to get these results. Being lazy, thinking you're going to be successful, don't go together. I don't know what the heck you think. It don't go together. Your YouTube guru lied to you. Your Instagram guru lied to you. Your crypto expert who got the Bentley that he rented for that day in a private jet he rented so he can take these pictures to sell you that BS course lied to you. Lazy and successful do not go together. You got to put in hard work and dedication. Okay? Yeah. Start now. Let's get this ES crack. But yeah, let that marinate on you like neck bone juice now. Hard work, dedication, no laziness. All right. Starting week out. We already marked up the high low so we can kind of save some time and keep it fine. All right. Now, when we look at Friday, this was our opening range Friday. This is why I closed. We started off on Sunday, then Monday led over here. And instantly we start taking out levels, right? Start taking levels of liquidity. We took this level here. Boom. This was the Sunday setup running into the London Monday morning market play, right, on the ES. Raymond took a nice advantage of this. This is staying, right? But you got to ask yourself, ES kept following. What target was they going for? That's when you look over to your left. You see this little order block right here, 3 candlestick order block continuation. Boom, that's the initial target. They popped off, right? Now, the key is understanding once you have this rejection block over here, because you got to ask, like, why did ES fall? All this good news, blah, blah, blah. What's going on here? What's the deal? Right? When you see this pair of candles, you had this bullish engulfing candle followed by this bearish engulfing. That's a monstrous bearish engulfing. Either it's equal to the same body size. Let's zoom in. Oop. So either this candle going to be equal or it's going to be greater than. But when you get a bearish engulfing this great at the top of an uptrend, price like to revisit these zones and key off of that and start shifting downwards, right? That's a peak formation. So this is what I always say, and I'm going to show you another one today on gold, but made me change my thesis. I was bullish on gold, but I had to change it once I seen that peak formation. I wasn't going to be foolish. So I already knew that wasn't going to be my trade because I wasn't 100% sold on my direction. If I'm not 100% sold on my direction, I'm not going to trade it. I'm just going to look at it or just track it and just, put it in the notebooks, right? So this what I mean. We got a peak formation here. Boom, creating a rejection block. Price revisit once, boom, reject, start going down. This put in our pivot point, right? Let's slide over a little bit. Boom. So when we was looking at it on Sunday, I'm like, okay, cool. They're gonna go down. We in this block. They're gonna shift down. They're gonna take this level first, which they did. Got a little bit of bounce, right? And it's going into your Monday morning market hours. So this is from all Sunday, London, Monday, London, boom, 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 down 7 o'clock hour. They took the first initial low from 9 o'clock Friday, right? Keyed off of that. Then this also was your Friday low, midnight Friday low too as well. They took that little small liquidity, came back. Reason why they did this, anytime they do a breaker structure, they're going to want to come back. Why? Because they know people who took short positions, they stop losses are in the profit. So they want to liquidate these folks, right? And this is where a 9 out of 10 who probably moved a stop loss to break even, they took them out right here. This ain't make believe. They do this for a reason, right? So we know for sure that was a good pivot point to say if you went short here, my stop loss will be here. If I'm short up here, my break even going to be here, especially on an hour chart because I want the rest of this low. And if you seen this order block, 9 out of 10 is going to be your target, right? So you can easily be like, all right, I'm going to catch the breakout. Stop loss there on ES 36 ticks is not bad for a stop loss for ES. Knowing good and well, you can say I can go here 91 ticks, or I can go to the block. Right above the block is 100 ticks. Because, remember, pigs get fat, hogs get slaughtered. You don't want to be a hog, so you want to get out the way. You just want to get to the block. If you trade to the block, you want to get to it and get out the way, right? But if you say, hey, I was in an overnight session, I seen them break the Friday close in price, and I'm gonna say I'm gonna have a limit order sitting right here because I know they're gonna travel down. Well, guess what? Once again, a 36 tick stop loss, and you could have rolled it down for 133 ticks. Come on, 12.50 a tick. You do the math, right? That's a very nice trade, especially you keeping it casual. But if you're in there sitting there saying, oh man, I'm in the money. Let me move my stop loss down. Now my stop loss right here. You already know they roll you out. Or you added a position, you decide to say, oh, they got another pivot point. I'm gonna put a breakout trade there. I'm gonna add another position, blah, 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 blah. Getting a little greedy, getting a little saucy with it, right? And they come back and they take you out after doing all this dropping. Let's get this box out of here, right? From this break to here. They made a 65 tick drop and you still holding up. They do the reversal, boom, reclaim everything. You know how they like to say, reclaim your time, right? They reclaim their time, hit you back up, right? They weigh you out. They do a 100 tick recovery, knock you smooth out. They knock your block smooth out because you're not paying attention. One, you didn't think they was going to do anything when they got to this pivot point here. You saw this going to run through. They're going to go to the block. They're not going from point A to point B like that. They're going to make some detours, and this is one of them, right? Break a structure, hit the Friday low. It's liquidity sitting here because somebody went long. Once again, people held positions. They went long over here because they still believe in uptrend. They was hoping that they could have took the high or at least keep trading up towards the weekly high, which didn't happen. Some traders didn't account for this. So the ones who seen what was happening once they got to the midway point, they started getting out the way here, still setting up false orders because they cannot sell a large block at once because they're going to be noticed by other traders, and then it's going to be harder to get off those orders, right? So they slowly setting you up. The people who say, oh, is this a pullback? Guess what? They got finesse on the lower, especially trading on lower time frames. You definitely got finesse into this. But by understanding where you at, peak formations, key levels, hey, I should have been going short here. The market is shifting. I'll bet the moment that happened, that's a failure swing, right? Followed by another failure swing. In the moment they start closing downwards, come on now, cheese gonna slide off the cracker anytime, every time. Okay, so keep it right. That was one of the best trade setups right there. Was the Monday push up because you didn't catch this. You didn't have to worry about it because hey, my target is here. So you're going to risk a 1 to 2 because if you go 30 ticks looking for a 60 tick profit, that risk to reward going to bring you a 2 to a 1 to 2, right? Because you're risking 1 to make 2, 30 ticks to make 60. That's almost, you're only making 2 times your money for how much your risk is. That is not enough. You need 3 times to 10 times your risk. I want to enter the market less as possible, and I want to make as much as possible. That's my goal. I don't want the 1 or 2s because what happens, you get the 1 or 2, you lose a trade, now you're at a 1 or 1. You lose another trade, now you're negative, right? By shooting for 1 to 5s, you got a couple of trades in between that will give you a buffer to allow you to keep attacking the market with precision. And yes, we're going to equate for some losses. You may have a bad week, you may have a bad month, but if you're not over trading, your accounts will be fine and you can make that up with one winning trade. There's no it, right? Some months ain't your month, some weeks ain't your weeks. Once you learn that, you'll be fine. Now, looking at your Monday range, this was the following setup, right? So I'm looking at it, boom, boom, boom. This a high for Monday. Mark that up real quick, like, oh, then I'm gonna find my low for Monday, which is clearly here inside that block. So this is the first test of the block. When it hit, it had got some form of respect. Not some, right? So this is your first retest. It was a strong retest. But remember, at the end of the day, we are trading down. So let me add a quick little moving average. I'm going to add a 20 EMA. right? So this is what you know what's going on. It's just a guideline. Like, you try to read in books and you keep it along with a pen or your finger, trying not to lose your placement. That same thing with this movement average. It's just a guideline. It's nothing magical. It's just a guideline. No, like, hey, if they closing below this, yeah, the good time's gonna continue rolling, right? Understand you had a failure swing here. Now we're putting in this is a lower high, boom, boom, lower low, boom, boom, lower high. We putting in market structure, folks. Boom, boom, lower low. Remember, we are not closing above this, right? So, boom, beep, beep, beep. So that automatically telling you what's your next setup. When you get that pullback, guess what? We're gonna shift down some more, right? Clearly over here on Tuesday, you got equal highs. So that's your almost like a double. That is a double topping pattern. All right. I hope you took that free. That thing looked nice. Real, real. But this was your double top pattern, right? It's set up right here from Monday close to Tuesday towards the end of the market. I noticed a tail end that you was available for the London Asian. And you seen that consolidation breakdown for Wednesday with the news report and everything like that. Yeah, you would have had a nice 10x trade, right? So what's the 10x trade? Because we got to operate off the daily process. Monday was a nice push down with a range. Tuesday, let's talk about it, right? Tuesday, this was the highest point on Tuesday was here. Notice we still inside the Monday range. And we did a range expansion to the downside, right? So that can also tell you this block is not going to be respected. Without this data, we already can tell, like, hey, the market is pushing down. They are not holding this block. This block got a lot of respect. This one got no respect. So we go ahead, X that out, right? But that was the initial target. The first hit of the block, you're going to get a lot of respect. You see, they came back again. It's the second hit. They got minor respect stopped at this key level. Once again, another rejection block. Keep those things in mind. Oh, oh. They went a little bit higher, swept some liquidity because you still had some wicks here. I guarantee you go inside this candle, you're going to see a volume imbalance, you're going to see a fair value gap, you're going to see something or another rejection block on a lower time frame in this wick by itself, right? So those also matter. That's why when I see these, I like to let price get up there, start rejecting, and then I'm going to take the rejection of this area and put my stop loss at the highest pivot point. I'm gonna go into a lower time frame, find the best trade setup for that, and I'm gonna get at it. Cut, dry, simple, right? But this the end of the day, I'm not trading at this hour. I will take a SPY contract because this is the ES. I can take a SPY contract and hold it overnight. But will I take a futures trade at this hour? No, I will not. The volume not there. It's too late in the evening and it's outside of my trading hour, so I'm not trading this whatsoever. So it just would have been what it was, right? All right, cool. So following the same principles, understanding we didn't put the Monday close, but for time's sakes, I don't want to be dwelling on this too long. Y'all seen let's go back to the other videos when I break the reason why we mark out the New York closing price. Oh, this Tuesday, New York closing price, right? Oh. All right. So when you come back in the morning and you see all the Asian, all of London, boom, 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 they closing below the New York price, right? We already see we in a downtrend. Cool. So you should be looking for bearish setups. Problem is the train left the station already, right? The train left the station. Where could you get in at? It's just been a straight fall. If you enter at the wrong moment, you can get caught up in one of these wicks. This is a 1 hour chart. So if you think about it, you jump in on a run. It looked nice here because this is hindsight, right? This hindsight 2020. Everything looked nice on hindsight 2020. But when you look at it, these little dojis, those are pullbacks. What would have happened to your stop loss, right? And with higher volume, the stop loss would have to be more. You're going to have to account for more. Lower volume, you can kind of get away with the 30, 20 tick stop losses. But with higher volume, you're going to need a bigger stop loss and you're going to wear you out. So let's jump into it, right? Look into a 15-minute chart real quick. And you need some consolidation breakout, right? Where's the New York hour? Here we go. Right. Right here. You only had a two candlestick pullback to the 20 EMA at 10:45. If you would have took that little breakout, you could have caught something, but what's your risk to reward here? Right? The best trade happened in the London market. So you telling me you got to risk 65 ticks? That's the best stop loss you can get. Would you make the money up? Yes, but I ain't putting no damn to 65 tick stop loss. What you want for? For 100? Let's get this. Stop playing. Let's say you would have took the breakout of that, right? So you would have risked 68 ticks for 225. The risk to reward, yes, but 60 something ticks on the ES, I wouldn't feel comfortable with that. I ain't gonna sit there and lie to you and say, oh yeah, I'd take that trade. No, I wouldn't. No way I would. Unless I can catch a reversal off of this pivot, I'm not taking this trade. I ain't taking it down there anyway. I got to get it way up here. I need to be somewhere up here in this ballpark and say, like, hey, I need some form of reversal, right? Like what I'm going to catch. So from there, that's when you got to work the fibs, right? You got to ask yourself, like, where are they dumping? Where's my pivot point at? Where can I get in? You run a fib, catch that low, say, all right, cool. On 15 minutes, they having a retracement. Oh, we had 38. I like a 50% retracement in that ballpark. Oh, here we go. Play action. One of the biggest. I know it. Bump, bump. So we got a small gap right there, but definitely you got a nice little volume imbalance right here. So let's drop down to a 5-minute chart real fast. And sun there. Hold on. Yeah, buddy. There we go. 3 candlesticks. So this little consolidation here, you seen they keyed off this area before, like 1 wick, boom, again. Then that's how you go. Even start, easy. That's what I'm saying. So you got to find something like this on a lower time frame and attack it. You've seen the consolidation here before. They broke down what I'm going to attack here. If they close below that 20 EMA, oh yeah, you can get them out like that. You've seen the weak candlesticks going up right here, right? So I'm going to want to attack this. You just got to find your entry. If not, you don't feel comfortable with it. What's your risk reward? If none of that is understood ahead of time, find another trade. Don't take the risk. Will it pay off? Yes. If you was way back there, that was a great trade. But you way down here, where can you get in at? Right? What is a good entry for you? That's the whole parameters you got to ask yourself. And if you got to ask all those questions, that means it's too complicated. It's not worth it. Go on about your business. Find another setup where you can clearly execute in your risk parameters that's not going to stress you out, that you're not going to second guess and keep asking, is this over? Is this over? Is this fully extended out? Is the move finished? Am I late to the party? If you got to keep asking those questions, it's not the trade for you. Walk away, kick rocks, right? So let's go over to gold because we want to continue on these peak formations, right? I got to drive these home. Ooh, ooh, ooh. Big. Good Lord. All right, cool. So this week kicking off. All right. Monday, off top. You seen we got the breakout above the high. Okay. Take the high out. Boom. It's a Monday high. A Monday low. Mm-hmm. Boom. Then we get our Monday closing price. Right. Close of the doji. All right, cool. So from there, you already see we already took the weekly high. Great, right? Key is we running highs. We running high. How, where are we going? We had all-time new highs, goal in new territory. Where are we gonna go? Right? What I did over the weekend on my other chart, right? Everybody else seen it on Sunday. I simply ran my fib extension from I believe it's this pivot point to here, give or take. I didn't. That was not it. Where did I run that bill? It had to be from one of these other pivot points. Yeah, that's more like it. Yeah, it had to been from here. So when I ran my fib extension, because it's the Friday level, so I wanted to catch this pivot down. That way we can project our levels for the upcoming breakout, right? Field retracement are great for ranges, but when you don't have a range and you got breakouts in new territory, fib extensions is where it's at. It can give you some levels, the 61%, 100, 127, 144, 161, 161, right? Those are all tangible levels that you can target. You see, hit the 127 fib extension. Now, price broke out, played around, Monday closed, Tuesday open up, all the Asian, London consolidated, boom, the push up, right? That's what I mean. We had the 127% fib extension. I'm like, okay, how high can we actually go? Can we actually set anything up? Let's add some oscillators in and let's look at it, right? And it's that peak formation I was talking about right here. Oh, at a high, sunset. So from there, you got to ask yourself, we going up, but what's happening? So we kind of curl down. We fell down another failure swing here. Then with a straight dump because gold been running too hot. Is no buyers at that level. You got to ask yourself, who gonna buy at this level? Who? I don't know. I wouldn't. It's overpriced. That's too high. It's not a deal. Where's the deals? Right? You got to ask yourself, where is the deals? It's not up there. Guarantee you that, right? I guarantee you that, sir. Thanks for watching. All right. So when you're looking at it, I'm already this morning marked my Tuesday high. I'm like, okay, cool. They took that high. They making progress, but we getting dangerous. Right? We getting real dangerous with the levels. Tuesday low, you already seen what time it was. And like I told the guys last night, I said, depends on where gold at with this closing price. I ain't rocking with it for longs position. I said if it's below the closing price when they open up, I'm going short, right? Or I'll be looking for short sales. Now on the lower time frame, let's go down to 12 real quick. Then you kind of the peak formation is more defined here. All right. When I seen this consolidation this morning, I'm like, man, I said I'm bullish on gold, but that's my bias. And when I have a bias, an overwhelming bias about a direction, I typically try to remove myself from the trade. If I can, if I fail to remove myself from the trade and my bias, I cannot trade that trade. I learned it doesn't work for me. It get me in a lot of trouble, and I just wind up losing money when I have a one-sided bias to the market. When I say, "No, I'm gonna do this," da 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 da. Right? I have other reasons why I want gold to go to the moon. That's some personal gain. But when it comes down to trading, I cannot have a personal bias towards a direction in the market because they just lead to failed trades. You don't want that. You want to avoid that. That's trading psychology, right? Now, when I see the market start doing this action here, I said, we're consolidating. This is not good, right? We're consolidating the level. That means a trapping price. If they went up, peak formation, boom, they back at the closing price of the New York and they consolidate. This is a strong pivot point here. Watch out now, right? So this is a pivot point. They should hold. Price shouldn't break that. Once price broke that, come back, it was over. Murder, she wrote. Then from here, this is another block, right? So from here is another little order block. They shouldn't broke that. Gold love his order blocks. If anything, I know for sure. If it don't key off that order block, it's bad news. That's bad news. So if you still wasn't sure what was gonna happen, once you seen that, it break a strong consolidation. Remember, this is a 12-minute chart. So this is not a 5 minute, 1 minute, 3 minutes, it's 12, right? 12, 15, you're going to see the same consolidation here, right? The moment they broke that, it's over. We're going to definitely get some downside action. And what's the targets on the table here? We coming back into the range. Do you see clearly see they hit the Monday low? That's why we marked this stuff up because these are targets. I target the daily ranges because when they are training and they running to a certain direction, they're going to take out those daily levels. Those daily pivot points is a lot of liquidity there because somebody called the top, somebody called the bottoms. People reverse at those levels. So they definitely going to be putting stops there, going to have orders sitting there, all kind of good treats that they are waiting for those people to take those levels because they triggered higher time frame traders the moment they broke this. Everybody say, we going down, we all in alignment, go to sell off. Oh, to the dirt, the way they go, right? So when you wake up in the morning, you see a peak formation from the London consolidation all the way to New York open. Below closing price of yesterday. So that means no progress. The reason why that's important, look, same thing Monday, right? Monday hit a low. Monday, New York closing price trading above it. It was a bullish day. So you would have held, it was a janky run, not a good run, but a janky run, right? If you would have held that, you could have got all that upside price action. So you could have went over to the option market, got your option contract, or you got your own futures account, Forex account. You could have held that for the whole day, took gold up. You could have got in at the Asian market and you could have held up and down, up and down. I don't like price action like this because it's janky. I like a point A to point B setup. That's me personally. I don't want to be there. I don't like all the up and downs because I need to put a stop loss somewhere. Where can I put my stop loss? If it's doing all this up and down, consolidating, it's kind of hard to place a stop loss and profit, lock in some profits and walk away because it's janky. I like to, move my stop loss up in levels just in case it max out. I look for a 1 to 10 trade, but at the same time, I'm looking for to trail my stops. I like to trail my profits from each pivot points on significant time frames. That way I know for sure this is market structure. You have no business breaking this level. So we shouldn't be worried about that, right? We shouldn't be worrying about if they're going to break it, what's going to happen, blah, blah, blah. We should be cool. But this is a little janky. You can put your EMA up there. You see, they was kind of riding, but at the same time, it was doing all this extra stuff, revisiting levels, breaking down all that. It was not a smooth ride, but it was a ride, right? This was smooth right here. But this was kind of janky. So I would have waited. You had a nice peak formation, closing below your 20. Boom. This is the ride you want. No look backs. You want no look back trades. If the trade is looking back, something's wrong. I want a non-look back trade. Let's get rid of that box, right? You got a 3 candlestick order block continuation. And they actually keyed off of that later on, right? See little doji. Sale. They came down. Whoop. Came back in, test the zone, he dropped. No look back. That was another spot you could have got in. So you got a red, green candle like that boy Alpha Led said, the color changing. It's a strong bear trend. Wait for the first green candle, sell a green. Selling green or buying reds, right? In a strong trend. This is a green candle. You could have sold on this green candle and caught that ride down. That was a nice move. Let's see what that was. What would that yield us? So we would have took it from a reversal. Stop loss there, 44 ticks. Did you target the Monday low? 257. That's smooth. Risk for 100 though, but that's still smooth to me, right? Or let's say, hey, I'm gonna sell a green candle. I'm gonna wait for the pivot. Stop loss there. That's still kind of high. I wouldn't take that one. I had to take it at the high. I had to be up here. I had to be somewhere up in this block here. I had to catch them up there or somewhere in this pivot point. I would risk. Yeah. Because I like to use 10 tick stop loss. I want it nice and cheap. That maximize my risk to reward. If I can put on a 10 tick stop loss, that means I got a great entry. I'm going to maximize my reward because even if I get the 40 ticks, 50 ticks, 100 ticks, that's nothing but a 10x to me. Everything is a 1 at that moment. You can use a 10 tick stop loss or less on the gold, ES, crude oil. Those are ones, right? You only risking one at that moment to make whatever, because you make 20, 30, 40, 50 ticks, killing the game. Goal is always 100 plus, but 100 is a great trade. Anything above 30, still a good trade. One contract, come on, talk to me nice. All right, now let's. Now I know I'm kind of speed blitzing this. Did anybody got any questions? Nope. Okay. Yeah. And I'm gonna show you. Let me slide over to A and B because I'm gonna show you what I mean by selling green. Do 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 do. All right. So this was AMD yesterday. I took this quick little trade, little day trade over here. AMD. I seen a drop down, right? Well, then they did this little formation here. After that drop down, they did the little peak formation, and I was selling green. I'm down on a 1 minute chart. I have to slide. I can do it on the save some candlesticks. We ain't got to be that exclusive, right? So I knew for sure, like, hey, on the 1 minute, this building up a nice little bear flag. I said, man, yeah, I just got to get up there, right? I said, that's going to be a nice dump. So from there, I'm like, okay, they're going to pull back. As soon as I got a little nice little green candle at the top, like that, sold off, picked up a contract. All right, cool. They pull back up. So I come back down. I said, well, contract on sale. I'm selling another one because I know for sure, like, yo, y'all are wrong. You ain't going to drop like this. And you've been running for a while. You need to sell off. You need to have a deeper retracement. I can go ahead and get some points off of this. I'm not sitting here for long, but I'm definitely going to get some points. So all I did was I ran my fib from here to here, right? Boom, boom. They got up to the 23. I started picking contracts up at the 23. When they came back down, I picked another contract up over here. Because if I'm wrong, I'm just going to buy another position, add to it because I'm looking to build size. I'm going to try to go to scale. So I'm going to put one tester contract out there real quick. From there, once I get a pullback, because options, sometimes you get a perfect entry, sometimes you don't. That's just me. I don't always get a best entry on some of these options trades. It's not that smooth, with all the factors, but I'm willing to scale into a trade. So I like to scale into my position instead of putting on a full position. So if I have an opportunity, great. If I don't, it is what it is, right? But I had a lot of conviction on this trade. So when they went up and they started doing this rejection stuff, I'm like, great. My target always the negative 27%. I got my alert here. I set my alerts. See, like you still have this one right here waiting because that was my stop loss. I said anything above that, I'm not taking. I just simply cut my position. If it goes above the 38% fib, I would cut my position and I'll wait for the 50 to 61% retracement, right? Let me put that on there so I can see those. I'll wait for a retracement in these levels, the golden ratio zone. If they go above the 38, I'm gonna have to wait for a deeper retracement. So I'm not gonna hold the position. I will cut it. I cut the position, wait for a deeper retracement at these key levels, and then buy back that position. So now the position is cheaper. I didn't have to risk that much capital, or I didn't lose that much capital to wait for it to come back down. You don't want to lose capital in these option trades. So you want to cut, then buy back or buy a stronger position closer to the money or in the money, deeper in the money, whichever way you like to do it. But you can, because remember, if it was this much here, think about what it's going to be here and here. It's going to discount harder. You can get a better position, better contract, and you can ride that out. The choice, right? So the moment it broke market structure, I started waiting for it. I started seeing a little weakness in the trend. So I took profit around here, repurpose you, bing. This one I chose to get out because I seen some weakness. It wasn't strong or nothing like that. So they got almost to the negative 27% and they started reversing. So I'm looking at it. I'm like, man, this ain't looking good. I got to a 1 hour chart. I said, man, this thing closed. I was on the phone. That boy Jeff, matter of fact, I was talking to him. I said, yo, I said, if this candle close, I said, I'm out the way. So, like right here. So this is the count I'm looking at. I said he got halfway there. I'm like, I ain't tripping. This just a quick scalp. That's all I'm looking for. So get 20 plus 50%. I'm happy with that. I'm out the way. I'm not tripping. Right. So the moment I seen this candle come in, I said, okay, cool, they're gonna pull back. Now, I was originally thinking, I'm like, all right, well, they could pull all the way back, fill this gap, but they did not. They chose to get back in this ballpark here. It did shift farther down, right? I wasn't too much pressed about it, but I said, hey, I'm already done with my trade. I'm no longer invested in this, but I will kind of keep an eye on it for educational purposes to kind of track it so we can review it. And maybe somebody else can learn something from this outside of me, right? It's for good practice. Last but not least, let's slide over here and see it. Because I know we can't be here all day. We got to hand out some small pay. Yeah. Mm-hmm. Yeah, we got to get this. All right. See it. Now, I was actually looking at this today. I was going to get jumped straight into it. This all looking at, right? I seen that they was running all week. I was like, all right, my bias is bullish. And I was over here 7. Yeah. There we go in that ballpark. Let's get 10 piece. 752. Yep. Now, originally, I was looking at these key levels. It's Tuesday high, right? Save some time. I ain't gonna go through the whole thing. Then was Tuesday. Do. Just wow, real quick. All right. Same thing. Crude oil been running. I'm thinking it was going to give a deeper retracement, but I thought it was just going to be a quick retracement and continue going up on a higher time frame. Aiming for the high of the week, which is 75.17. I'm looking for it to kind of get up in those levels. That was my projection for it, so I didn't mind buying it back up in the direction, right? But you see, in London, they closed below the closing price of Tuesday, pushing in that first red day, right? So they start pushing down, boom, boom, boom. So I'm watching price, right? Not worried about it. They took some liquidity here. And I'm just waiting, right? Because I go down first thing in the morning and I see this consolidation. Because this originally was my target. 100 ticks up this way. Because I'm looking for them to go back, take Tuesday high, but I'm like, I ain't that great. Right. But this whole thing about patience. I seen the consolidation. I said, At this moment, I wanted to enter the trade somewhere down here in this ballpark, but I knew, like, hey, no, it's too early. The volume is not there. Wait for the volume. Wait for the volume, right? So I'll go down, just 3-minute vibe. I'm waiting on the volume. I'm looking for candlesticks to enter on. I'm looking for setups, right? I'm looking for opportunities, right? Now here, when it started popping off like this, I seen this morning star, right? I said, man, I want to enter on that. I was looking for them to kind of come down here and get in right here. But the problem was they was acting funny. So once they took off like this, I was like, man, on this candle, they should dip down into this morning star, right? This little imbalance right here. They should dip down in here and pick me up and go on about their day. But from there, I'm like, man, we're in a downturn. Maybe they flip it. I said, I wasn't too sure. I was still undecided between taking gold and crude oil. Crude oil is my go-to favorite, right? But I was still kind of indecisive about it. So I took my order off the table because originally I think my order would have been, it would have been there. And I was like, okay, midway point, because this is where the 20 EMA was. I wanted to hit it from there, right? Which would have been great because that would have definitely put some numbers on the board, right? Even if I would have targeted the closing price, that would have been 85 ticks, right? While looking for what I was looking for. but I didn't get that price because it was acting fugazi. So I'm like, okay, it'll be crazy, right? So it hits, boom. I see the drop. It drops down into it. I catch it on the way out. I'm like, okay, that's cool with me. I set my little limit order. Boom, catch it, and I'm just riding price. Now we got about here when they start getting some trouble, right? I'm watching it. Boom, boom, boom. I got profits locked in after this explosive candle because it just went. It went. When I say it went, right? That's what I mean. Volume came in 9 o'clock. Boom, boom, boom. Here's a second. 9 to 9:30, more volume came in, but I'm looking at price. So around this time, as I'm looking at price, I'm trailing it. All right, I said I got two locked in. First, I started off with 2 ticks. Like, okay, great. Then I moved it up 10. I'm like, okay, great. Let's lock in some more profits. I got 20 locked in. I'm just sitting there waiting, waiting, waiting. I'm looking at it. I'm like, man, they putting in some strong candle rejections. I'm watching, waiting, chilling. I said, man, Sunday struggling with this level. I'm gonna move my stop loss. 45 ticks in a profit, right? And it's on I went down to the 1 minute chart. So market structure looked way different. That's why I don't like being in that 1 minute. Right? So the 1 minute chart started doing all this stuff. It started doing all these little games, right? It started playing around and all that little stuff. I'm like, damn. So I'm watching it, waiting, like, all right, what you gonna do? You gonna break? So I'm like, man, you gonna break? I said, man, I said, shoot, should I be here? Why should I go? I'm just watching it, watching price do what they do, dancing around. And then from there, I'm like, I said originally, I said I should just put it here, or let me just catch a pivot, right? I'm like, where should I go? So eventually, I seen it playing around. I took my ticks, got out to trade. I said, okay, cool. We're almost at the high. And sure enough, it kept going. Once it found support on the 20 EMA, it kept going. It got to the closing price high, which is the short sales entry. If you really want to catch it, the best trade technically was the short sale because they gave you the 100 tick run. That was a 1 to 10. I got a 1 to 4 off of it, but it definitely gave a 1 to 10 later on over here. So if I would have been a little more patient, but this outside of my trading window. My trading window is over here. This is what I'm analyzing the market, waiting on that 9 o'clock opening market breakout volume. Boom, it went. It just had to be managed a little bit different. The outcome would have been different. There's a little bit more management, right? Better management, a little looser on the stop. Just not micromanaging a trade. I could have got 50 more ticks out of it, been good for the day, whatever, right? But if I was looking for that 1 to 10, I would not have got that trade because it wouldn't got to my target, right? It got shy of the target, gave up, boom, that's it. It's done for the day. But what I try to do is I try to always keep an open mind, right? If I'm saying, if I'm wrong, let me be open-minded about am I wrong. So let's eliminate this real quick. This is something I always do. I say, if I'm wrong, let's do this. Here. Nah, it was there. That's the pivot. So from there, I watched. All right, price went up, boom, 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 boom. I said, well, they got to do this. That's a 61, 65% retracement if it is a downtrend, right? Well, guess what? They rejected from it. So I always like having these levels there to say, well, they reject from this, blah, 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 right? That's one thing I do in most cases. I also like to do this. Like today, I was like, well, I'm should be bullish. I said, let me see where they currently sitting at, right? I said, they did 61% retracement down. That's why another reason why I said, all right, I feel comfortable, but this is my bias, right? If I sound bullish and I do my retracement from here to here, now everything gonna say, man, they did a 61% retracement, dog. That's discount. They good. Woo. They got up to the 23, crapped out. That's it. I'm looking for at least a high here or there. My exit was before the Tuesday high, so I'm looking for a range expansion to the upside, right? I'm not looking for the whole move, but just a little bit. I just want my trade and get out the way. Once I took my profits, I'm like, well, successful trade for the day, 100%, paid $4 and change in fees. I'm out the way. Well, I'm good. Call it a day. After this, I seen this happen. I'm like, I don't care. Whatever, shut it down. I do my market review, took my screenshots. I take my screenshots of my trades. That way I can do my triage later on and I can track all of that, right? So once I put my markers on the chart to say, all right, cool, this is my markers, my entry, my exit. From there, I can remember that by taking a screenshot, saving it for later. So when I go back and say, hey, this was the trade. What did you miss? Okay, that's a winning trade. And I can memorize that in my memory by doing that action, right? And it pays off in the long run, believe me. So let's take a quick screenshot, boom, boom, get it out the way, you good to go. So on that note, that's my piece. Okay, let me do this.